His firm has been rated as the best investment banking firm in India, and he also runs India's top equity broking firm. On this edition of Market Makers, I have with me the man who runs both, Dharmesh Mehta, CEO of Axis Capital. Dharmesh, thank you for joining us.
Thank you, Nikunj.
And thank you for inviting us here. Lovely place, lovely setting.
And it's a great place after such a markets today, right?
But market setting of late has been slightly shaky. Volatility has come back, India story, big question mark, and we've seen a gut-wrenching fall in mid-cap stocks.
Well, some kind of froth had built up when the markets went up almost as good as 30,000. So you expected some kind of a correction in the markets. But these are all short-term events, really going to happen. I believe the markets overreacted to the kind of news which yesterday the RBI governor gave on the economy and the kind of pause which people think they have made on the interest rate cuts. I think it's a little bit overdone. Obviously, nobody can predict the monsoon, so it will be only clear end August or maybe around end August to September, what's going to happen in the monsoon front and what happens if the monsoon is great. Because last year also the same thing happened. People expected a very poor monsoon and suddenly in the between of the monsoon turned out to be almost as good as possible. So I say the current correction is overdone, but obviously markets were waiting for this kind of correction to happen. So it's a great opportunity for investors who are buying India for the long term.
You know, I agree with you that one should not be a whistleblower about the monsoon. I mean, it's just what, June first week.
Exactly.
But let's talk about the RBI communication. Raghuram Rajan has indicated that he has front-loaded the rate cut. He would be data dependent.
Sure.
One ledge on which markets were rallying, or so far have rallied, is that rates will come down, margins will expand, and companies will get fitter and better. That thesis has got challenged.
Well, in fact, he's telling you that he's already done one rate cut in expectation that things will be okay. So if at all he goes right, and he's also clearly indicated that I won't stop at this, I can do further subject to I get the data which I want, subject to monsoons are in order. So in fact, he's not even told the markets that this is the last part of the rate cut. He just said that it's a pause till the time they get more data to substantiate the further rate cuts in the country, which is any good RBI governor would do that.
Dharmesh, let's talk about earnings. And the earnings season so far has been disappointing. We've seen downgrades across the board, and bellwether sectors like IT and pharma, the evergreen sectors, have also disappointed. So are investors now asking you a tough question because they bought into the India story a year ago, 2 years ago, with the assumption that economy will turn around and earnings will pick up. So the macros are in place, but the micros are horrible.
Well, last quarter of this year, people expected that there will be some kind of a poor earnings. So part of it was in the expectation already. Yes, few pharma companies shocked the market, but overall I think so this kind of results were expected. Obviously what people didn't expect was the rise in the crude price and kind of the weak data which came out. That has scared more rather than the earnings. And anybody who's buying India was not buying India for the last quarter or last year earnings. He's purely buying you on FY17 and FY16, what's going to happen in this year and next year. So I don't believe earnings are scared most, but it's more of the other economic factors, the global turmoil, crude prices going up, that's what scared investors more rather than the last quarter earnings.
What is your observation about MAT? That has been a thorny issue, a big issue. I'm sure your foreign clients are asking you tough questions that what have we done, what do we do now?
Well, obviously that was a big dampener and I think it was something which we didn't want. It is more that we axe our own leg, in that kind of a situation. We just didn't need this kind of controversy in this current environment. But yes, people do make mistakes and it has been rightfully corrected immediately. So I would not, that MAT episode is behind us and I would say people have forgotten about it, but obviously that become more cautious saying can this come again? So the government will have to give more confidence that this kind of steps won't happen in future.
What is the right way to look at global liquidity? $20 billion this year and $2 billion out, which is nothing, or $2 billion which went away or went out in April and May is the turning of the tide?
No, some profit booking was expected when the markets go up in this manner. So I wouldn't be looking at $2 billion going out. Also, Nikunj, you have to understand that everything in the market is not a buy. So clearly this is now more a stock-specific market. So when you saw a Sun Pharma block of let's say $3 billion or more, it just happened overnight. Or some other deals, all the deals are happening overnight. So wherever there's stock-specific interest, people come as soon as the supply is there. So I'm not too bothered on the outflow in the short term, but is the India call off? I don't believe that's the story right now. In fact, people are now more interested who missed out on the first part of the rally to come back to India.
The India story clearly is centered around economic recovery, better management and great governance. But the market currently is mounting on IT, pharma and consumer names. So there is a disconnect in the India pitch and the absolute reality?
Well, still we are not seeing the economy doing well. As the governor also said that they have not seen enough data, which gives them that the economy has already started turning around. So obviously all of them are still waiting to see the real economy starts turning around, the capex plans get into mode, people start putting investments in the ground. That's not happened yet, and that's the time you go and buy the cyclicals when you see that phase happening. I believe we are 3 to 6 months away from that phase at best. But can this stock give you multi-bagger returns? Definitely yes.
So is that the pitch from Axis Capital now? Buy into cyclicals, buy into economy-related stocks, because that's where disproportionate gains would be made?
Stock specific, yes. It's not like a macro call that you buy the entire infra, power or something like that. But stock specific, wherever there's good quality stock, good corporate governance, it's just that because of the India slowdown, they've been affected. Those are the stocks I would go and buy right now.
What about the Modi premium?
Well, the Modi premium is still there, if you ask me. Today's date, despite the weak numbers or kind of situation we are in today on the global prices of crude or the kind of concerns that come up, people still believe in the Modi story. And I believe that's what is happening. And let's be honest on this. The fact is that they have done a lot of things, which has not been visible to the media or not coming in headlines. A lot of things have gone behind doing all the reforms that happened, the power, the spectrum auctions, the coal auctions. So a lot of hard work goes into this kind of thing, and to expect returns in 1 year is not fair to any government. So I believe the Modi premium will remain for some more time. Obviously, the expectations were sky high. They have come down, which is one way good, because henceforth the expectations are going to be normal rather than abnormal.
At 17 times or 16 times 1 year forward, what is the justification to buy into India when RBI or your central bank has come out and slashed their own GDP estimates?
Well, RBI goes by the numbers what they have today. I don't believe RBI is pretty guessing the numbers for the next year right now. As soon as the numbers change, even their numbers are going to change.
Why do you think earnings will pick up?
I think so. As soon as the confidence comes back, that is when the earnings start picking up, and if not more than the earnings, the sentiment and the PE starts changing. So you need that one confidence booster, which happened when Mr. Modi came to the government. That was a big PE changer for India. So maybe the earnings don't change, but the PE re-rating again happens for India. And then you'll see the earning change in FY17 rather than more in FY16.
Some would argue, Dharmesh, that PE multiples have already expanded for the better part of FY15, better part of FY16. It's all been PE expansion, earning growth is not there. So Indian markets, at least the stocks which you track, the ones which you recommend, aren't they priced to perfection?
Not some of them. I would say not all of them are priced to perfection. There are a lot of stocks which are still at the low P's. In fact, today I was just reading that there are more than 150, 200 stocks which have hit their all-time lows. So, or a 52-week low.
So it's not all hunky-dory.
It's not hunky-dory, and it's all not that bad also. Simply because, let's take an example of Reliance. The stock is still trading around 900 levels. Where was it in the peak? It was more than double.
That was peak of commodity cycle. This
exactly.
is the downfall of commodity cycle.
Yeah, but then you look at the numbers of Reliance during that commodity cycle versus this. Look at the last quarter earnings. So there are a lot of stocks which are heavyweight in Sensex, but still the stock price is way below where they were close to their highs, right? So there is enough. So if you dissect the entire index, you'll see a lot of stocks which are still available cheap. Though indexes looks like 27, 28,000, but the stocks are still nowhere close to the 27, 28,000 index, which was there in the old times.
So your pitch is, don't worry, buy into this fall, because progressively the rate of change is going to be constructive. Like a common friend of ours, Manish Chokhani, has always said that focus on where the puck could move, not where the puck has moved.
Exactly, and look at risk to reward. Nikunj, there's no free lunch in India, or anywhere in the world when you're investing in equities. So obviously you have to take some risk in the market. So in that sense, the risk to reward for India is absolutely in your favor. Yeah, maybe there's a 10% downside further down from here, fine. But if you want a return of more than 40, 50%,
that is possible.
That's possible. Stock specific. Stock specific. As I said, I don't look at the index now. The hope rally or the low hanging fruit is over. So you can't expect index to give you returns which they have given in the last 1 year or maybe 2 years down or 2 years in the last 2 years. But stock specific, can the stocks double? Can give you 50% return? Definitely yes. Why not?
Let's walk us through some key sectors which you like right now. We can't get into stocks, and I respect your compliance there. But what are the themes? For the longest time, you've liked banks, you've liked media. Are still those your pet themes?
Yeah, banks definitely is still the pet theme, because unless if you're bullish on India, you can't be bearish on banks. It's a very simple call, and especially when the economy is going to grow. Just imagine the banks have done such a fabulous job in the worst circumstances. What they need is just one kick of economy, and then you can see what kind of impact it comes to the earnings. Same thing, let's take media, you look at other sectors. Definitely we are very bullish, saying that in the long run, all these people have gone through the tough times for the business. As soon as things turn around, obviously that's a hope, but when things are around, this will be the best sectors possible.
So why bet on economy sectors? Why not just stick to consumer, pharma, outward-looking industries? Because a Sun Pharma or an Infosys, they've got their models right, and they are not very expensive. Return on equity, return on capital, they are enviable.
Yeah, but risk to reward, and also what kind of returns I'm looking at. Do you think these stocks can double from here? I don't think so. The economy stocks can double from here? Definitely yes. In fact, they have been more than 5x or 6x of what they are today when the economy is doing good. So I would say the risk to reward is in your favor in those kind of names. But obviously you don't put all the eggs in one basket. So you will be putting some stocks in those kind of names, while your majority portfolio, big difference if you want to be, can be in this consumer and the pharma names.
But in general, do you think IPO market will struggle and things will be difficult? Just when we thought the IPO market had revived, one or two good IPOs and then no follow-up after that. Today I read a comment from the finance ministry, and the finance ministry is now making a pitch that, look, we will not go out and sell paper because this is not a great market.
Well, yes, but honestly speaking, a lot of good deals are still going through the markets. You've seen demand on the lot of large blocks which has happened recently. So again, I say it's going to be at what valuation those IPOs come at. If there are reasonable valuation and businesses are good, I'm sure there's got enough demand. Like, as you know, we have been the we have the largest mandates in the market on the IPOs right now, and we've seen a lot of new businesses going to come to the markets. Now, those businesses are not listed today, so they're completely new to all investors. So the valuations will be completely different.
So can an e-commerce company or Indian e-commerce go public in next 12 months?
Absolutely, yes. But again, there I said, valuation will be the key. If they're expecting an US type of valuation in India today, they may not get it. But they'll have, in India, you still need to see the numbers rather than only hopes. So clearly, people will not value them the kind of valuation which you get in a much more developed market to understand this business is much better. But a lot of the other businesses, definitely yes. So I'm very excited with the kind of companies which are going to go to list. I can't name all of them, but the fact is I'm seeing all new businesses coming which will have their own niche demand. So it's not that it's one, I can't paint the entire picture with one brush saying that everybody will get the good demand or everybody will not be sellable. I can sell a deal even tomorrow morning in this market.
It has to be the pricing which has to be right.
Absolutely.
Throw in one more googly, which is the Fed angle. Sure. Enough and more has been discussed on what Fed will do, should do. It's honestly comical according to me. With every quarter, everybody is changing estimates, whether September or December. And I have heard March also.
Sure.
Can we write off Fed from an India standpoint?
You just can't write off Fed because that obviously dictates the global market and volatility in the world.
Oh, the near-term high.
Yeah, but I'm saying is, honestly speaking, everybody's got too technical and too short-term. What is going to happen next quarter, whether they'll cut rates, whether they change certain words and people start panicking or start getting very, very happy about it. I think so we should not look into that kind of a micro detail. Take a more longer-term view and look at it, and any which ways, what happens to India is more important. Assume Fed raises interest rates and India delivers on whatever they have promised, or you get the GST bill passed, or you get the land bill passed, the FI limits open up, which they have talked about, FDI, FI. What is going to happen to Indian markets? Will it collapse the way if the global markets are in turmoil? In fact, we may be the best outperforming market during that times. So it all depends at that given moment what's happening in India also. So I just can't look at one mirror and say, I can start driving the car accordingly. It's not that way. You will have to look at both the factors. Even when India does the right thing, it's also important what's going to happen in the global markets. So I think so we are interconnected, so I can't write them off completely, but I shouldn't be too micro bothered about it on a day-to-day.
But 25 bips here or there honestly doesn't matter in the overall scheme of things.
Yeah, because part of thing is already known. Part of thing people expect is the timing, when, rather than is it going to happen. So a lot of these things are known are expected kind of scenario happening. Let's say the RBI governor, lower the interest rate, which was expected. In fact, people expected more rather than 25 bips. So it all depends what kind of expectation the market is already built in and the market is already corrected prior to that event or not.
In general, which is one regulated sector which you are more bullish on? Is it oil? Is it something else? What are you really bullish on?
I am really bullish on power. I think so the way the reforms are happening in the power sector and the speed of execution, I am really bullish on power.
What makes you bullish on power?
Well, I think so. See, so far, Nikunj, if you have seen, the coal auctions have happened. It's still not implemented. It's not started execution. People have not started running the plants. That's going to generate a lot of jobs, a lot of boost to the economy. And I believe at this kind of prices where power is and the demand which is there in India, the guy who starts producing power is going to make a lot of money. So it's just a matter of time when this starts producing the results which people are waiting for, and the uncertainty goes away.
So what is the best way to play or bet on the power sector? Do you buy utilities? Do you buy transmission companies? Do you buy generating companies?
Mix of all. As I'm again repeating, it's not an easy thing that you can just buy one part. Within the utility companies also, you need to see which one is the best one, what is the balance sheet, what is the corporate governance, what are the valuation. Similarly, or even I can buy Coal India. So I can just play proxy to power through coal also. And large liquid name, you can buy as much as you want and it's liquid enough. So there are multiple ways to buy into power. Obviously, as I told you, the easy hanging fruit is gone. So you'll have to do a lot of more homework to understand which is the best bet in the current scenario.
We've corrected approximately 10% on the index from the recent high. Another 10%, will that be a stretch?
I think it will be overstretched. So for that, I need really a very poor monsoon or something like a mad scare which happens again for the market to go down by 10%. I wouldn't expect the markets to go down further from here 10% or more.
What explains such a sharp fall in mid caps and small caps? I mean, a stock like Unitech has fallen 50% in this month itself. Now it's a low base stock, so 50% may not look big, but it's a percentage which is a scary number.
Yeah, but a lot of these kind of names always get affected in the markets, are in a volatile state. So basically the stocks also go down without any volume because the buyers just vanish. What I've been seeing the last 2 days, there's not much volumes happening. So the delivery data is not that high. So it's clearly more of a margin sell-off or some kind of a scare on India by which people are just run away from mid-caps. And obviously when you're bearish, the last thing you want to buy is mid-caps. And when you're super bullish, the first thing you want to buy is mid-caps. So right away in a phase where people are not so hunky-dory about India, so they don't want to buy into mid-caps. And they would wait for the entire fall to get complete and then buy into those kind of mid-caps.
The best performing sector for this year is still pharma. Right. I was looking at Sun Pharma numbers, Lupin numbers, and they are indicating that something is changing in the US generic market. Pricing is not that stable. US FDA has gone really low and slow now. Is it time to now really ask yourself a tough question that is the pharma story over?
I don't think the story is over, but if the valuations are overpriced, then yes, I won't be buying into pharma because I don't see the great upside there. But yes, it's a great play as a defensive. So a lot of investors who have to be in India and don't want to take the risk currently are going to go and hide into the defensive like pharma, IT or consumer names. That's where you go and hide. So it is more of a hiding destination rather than something which you're very bullish on and you think you're going to make large returns.
PSU banks, is there a trade there? I mean, for the longest time we've said private banks is growth, PSU banks is value. There has to be some trade-off of valuation somewhere. 4 times HDFC Bank versus 1.5 times SBI. A value investor would say go for SBI, not for HDFC Bank.
On the larger banks or PSU banks, I agree there's a great value, but not all the PSU banks. And I still prefer private sector banks over PSU banks. But something like an SBI or some large bank like that, obviously it will also benefit the most when the economy rebounds. So few of them, yes, but as a overall sector play, I still be over bullish on the private sector banks.
Where do you think Rupee is headed?
I think the Rupee has done fantastically well if you look at all the other currencies in the last 1 year. So in fact, I'm surprised by the strength of the Rupee. And all of us know that RBI has got enough coffers right now to stabilize the Rupee if something goes wrong in the global markets and people start pulling out of India. So I'm very bullish on Rupee actually rather than bearish on Rupee. And this range of between 60 to 65 is a perfect range for India, wherein the exporters also make a lot of money and importers don't get hurt on if it swings again back to 70 level, which had happened last year. That fear is also no longer there. So it's in a good trading range.
For the longest time I've been interacting with you, and if I count the years, it's actually more than a decade. That means we both are officially very old now. But you always liked IT. You always liked Infosys. The management commentary is not that great now. Is it time now to really rework on valuations? Is it time to ask yourself again that tough question that IT is a great sector, but growth is not there. It's a matured industry.
Well, as I said, I don't want to comment on stock specific, but if you're talking about Infosys, I'm still very bullish on the stock. I think so. You have to give some time to the new management to, come and deliver. As I told you, it's like the same Modi thing. Everybody is expecting in 1 year and 2 years. It doesn't happen. A lot of these issues have to be fixed on a period of time. So Infosys also has gone through its own turmoil or its own issues. It takes time to fix. Is the management aware of it and working on it? I think so, definitely yes. Am I confident they will deliver? I'm so more than confident that I believe they should deliver on.
As a PE investor, you have to catch them young. As a merchant banker, you have to make them big. So where should one hunt right now for new ideas, and what has already become big and mature in this market?
I think so money is to be made in India. So you have to catch those kind of diamonds which are still not being discovered by the markets, and you have a lot of them. And when bull markets happen, very long-term bull market like 4-5 years, you're going to get stocks which are going to give you 4x, 5x or 10, 20x. I remember in 2000s, used to look like stocks like MRF, Eicher Motors. Look at those stocks. They were 100 crore market caps, and today they are multi-billion dollar market caps.
So are they the leaders of this bull market stocks which have done very well in last 1 or 2 years? Because you can smell and sense leadership. Well, the price action is there in front of you.
Yeah, but the leaders are in their own segment. They're not the leaders of the market because still they're not large, liquid, very fairly owned stocks. So I would say they're leaders in their own segment. But I'm looking for the new leaders in the next 10 years.
So is there a theme to this bull market? Because you know it much more than me. The 1999 bull market had the TMT theme. Sure. Then was the great infra theme. What is the theme for this market, which last year was introduced as the Modi bull market?
Well, I think so it has to be the Indian consumption theme, clearly. Now, the theme is still not played out yet because the economy is not revived. But anything which India consumes is going to be the big theme. And there you're going to go and see companies which are high on corporate governance, good numbers. The balance sheets are in a very, good
Some of
condition.
those companies are priced to perfection.
Well, that's what people said when Bharti got listed. I remember the IPO had actually gone down because people said it's overpriced and valuation not there. And you see what Bharti is delivered as a return in the next 10 years.
Is telecom a good dark horse?
Yes, definitely. With the advent of 3G and 4G coming in a big way, the data will play a real big game.
So Reliance Jio, not a threat?
Absolutely no. In fact, that will expand the market. If you remember when Reliance came to the market in the CDMA days, and they bought the price of the per second price from 16 rupees to 1 rupee or less than or 0.50 paisa, the market expanded big time. The same thing can happen to the data market. The data market can explode. Like today's date, you and me can't survive without a 3G or a Wi-Fi. You're no longer going to watch anything on 2G. And a lot of these smartphones which are coming are basically going to cater to that kind of data bandwidth. And people are start going to using phones as their television sets or their PCs. So I think that there's a humongous demand on the data side coming into India. And whichever stock you get, it can be the large telecom operators, some ancillaries which are going to supply to them, some app developers, whatever. I believe that will be a good area to go and see. Also content providers, because all these things will require content. So anything which has data needs content. So I'm very bullish on media sector because the content providers will be the kings in the next 5 years. You just have to bet on few of them and just sit over them. And that can be your multi-bagger theme.
Now, before we wrap, let's talk about the pet theme of the current administration. Swachh Bharat, Made in India, railways. What is the big theme which you would like to endorse from a market standpoint? The country needs all. I mean, we all know that railways or Swachh Bharat or digitization, they are powerful themes. But if I'm here just to make money and buy companies or sectors which would benefit because of the government initiative, how should I plow my funds?
Well, my bigger theme rather than make in India is change in India.
Okay.
I think so.
I like that. So what is change in India?
So you need to see the changes. You don't need to see the governments or the bureaucracy functioning in the same manner they've been functioning the last 10 years. You need speed, you need execution. As soon as you announce, you need the kind of a game plan for which, how are you going to take it to the end result? That's going to be the big change in India, which is still missing. We've been hearing a lot of things, but the people are disappointed with the speed with which it gets executed. Though intentions are great. I know it takes time in India, but we need to change that. That's why as soon as you see the change in India, the Make in India thing will happen, because it's all going to be related to the change in India. Unless you don't change the regulations, the regulatory, all the reforms on the land reforms, anything and everything, you cannot function and Make in India. So you need to get that in order first. And I believe the current government is on a roadmap on that to do it in a much speedier manner. Though the speed has not been what we had expected, but I'm not disappointed with the kind of things they've already started. And I want to give them 1 or 2 more years' time to go and deliver on those promises they have made.
We must recognize that India is a $2 trillion economy. Nothing is going to happen overnight, but the rate of change is important. That's what I think market men bet on. Appreciate your time. Glad you could join us. And once again, lovely house, lovely setting. Thank you for having us over.
Thank you, Nikunj.
That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show and have a lovely, lovely weekend.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.